Want to know one of the biggest mistakes investors make? They spread their money across a few assets and then they call it diversified. But here's the truth. If you're not diversifying the right way, you're just building a house of cards. One bad shift in the market and it could all come tumbling down. So let's talk about how to do it the smart way. Hi, I'm Todd Polke, a wealth strategist and investment coach who has helped thousands of people build multi-million-dollar investment portfolios and create true financial freedom. Today, I'm going to break down the 5 types of diversification that every investor needs to have in their portfolio. Because if you're not diversifying properly, that could spell disaster. But when you do it right, you'll be on the path to real financial sovereignty. Now, let's dive in. The first type of diversification every investor needs is asset class diversification. This is probably the one that most people are familiar with. Stocks, bonds, real estate, commodities, maybe even some crypto. But why is this so important? Let's say you have all your money in stocks. If the market crashes, you're going to take a huge hit. But if you spread your money across various asset classes, you can minimize this risk. For example, if stocks dip, your real estate investments might hold steady or even grow in value. Crypto could be volatile, but the upside potential could also make it worth including. The idea here is simple. Different asset classes often perform differently under the same market conditions, which creates some balance. Next up, we've got geographical diversification. This one is often overlooked, but it's incredibly important. You see, the world's market don't always move in sync. One country might be booming while another is in recession. By spreading your investments across different regions or even countries, you shield yourself from localized economic downturns. For instance, if you're only invested in the US stock market and there's a major downturn, you're in trouble. But if you've got some exposure to some markets in Europe, Asia, or emerging markets, the performance of those regions may not be directly tied to what's going on in the US. Plus, when you diversify geographically, you're also playing the jurisdiction game, protecting yourself from the political and regulatory risks of one country, of which there are a hell of a lot. All right, the third type is time diversification. Now, this is where things get really interesting because it's not just about assets, it's about spreading your investments across different time horizons. Now, imagine you've invested everything in long-term assets like real estate or certain stocks. Sure, they might provide great returns. But what happens when you need cash for something unexpected? This is where liquidity comes in, and it's one of the most underrated elements to a successful strategy. By diversifying across different time horizons means some short-term, some mid-term, and some long-term, you can ensure that you're not locked in when life throws a curveball or when there's another great opportunity that pops up that you want to grab hold of. Let's say you have some property investments, but you also have some stocks or bonds that you can sell quickly if needed. You won't find yourself scrambling for cash in an emergency if an emergency pops up. So what's the key takeaway? Liquidity is vital. You don't want everything tied up in assets that might take months, if not years, to even sell. Number 4, risk diversification. Now, this is a really important one. It's not just about choosing safer investments like bonds over stocks, for example. It's about understanding the risk profile of your investments and your own risk profile and make sure you're not overly exposed to any one type of risk. Some assets are high risk, high reward, like startups or certain types of crypto investments or real estate investments for sure. Others are more low risk but also have lower reward, like some government bonds as an example, or maybe your blue chip real estate. But what you want to avoid is having all your money in one category of risk, especially in high-risk investments that could blow up your portfolio. We've seen this happen many times. Take this for example. If you've got all your wealth tied up in one provider and one type of investment, and that provider hits a rough patch, you could lose everything. But if you spread your risk, whether it's in different types of properties, joint ventures, stocks, or different industries and providers, you'll weather the storm much better, balancing your portfolio's risk to prevent any one issue from wiping everything out. And finally, we get to strategy diversification. This is a big one and is foundational. It's often the one most investors miss. It's not just about what you invest in, it's how you invest. There are three main strategies you should be running in your portfolio at all times. Number one, capital growth strategy. This is what I call the buy and gold strategy. This is about buying assets that increase in value over time, so that you're storing wealth investments and where you can create equity positions that you can draw on to compound your returns. Cash flow, the paycheck strategy. You want investments that generate consistent income to support your lifestyle. You might think rental properties, dividends, or bond yields, and these can also support and provide the lubricant for the rest of your portfolio. And third, momentum. This is about making short-term profits and reinvesting them to pay down debt or to compound your profits and scale your portfolio. By using all three of these strategies, you're setting yourself up for long-term success. You get the growth you need, the cash flow to support your life and portfolio, and the ability to reinvest profits to accelerate your wealth building journey. So, if you want to start building your own diversified portfolio today, take a look at your current investments and see where you can diversify more. If you found this video helpful, hit that like button. And if you're ready to take the next step in your journey, jump over to Instagram, follow me on todd.polke, and send me a direct message with the word 100K on it, and we're gonna unlock for you exclusive training that's gonna give you some more tools, strategies, and tips to help you achieve lasting financial independence. Thanks for tuning in. I look forward to seeing you in the next video.